My next guest is one of the country's best stock pickers, and rumour has it that he unloaded Warrnambool cheese and butter stocks today. For more on that and whether he's expecting an upcoming correction within this bull market, we have Geoff Wilson, founder of Wilson Asset Management, the Wham Man. How are you?
Very well, thanks.
So you whammed it today. You bumped off Warrnambool stocks. You bought it at a low price and sold it at a high price.
Right.
That sounds logical to me.
Yeah, well, I mean, the guys, Chris Stott, our Chief Investment Officer, that was one of his picks. Yeah. Now, we started buying it around April a year and a half ago, around a little over $4.
Why do you like it? Why did Chris like it?
Well, there was interesting dynamics in the industry in terms of the potential consolidation play. That was sort of the upside. We liked it on the fundamentals initially, and the cream on the cake was the upside. And
good analogy, mate. The cream on the cake. Well, from Warrnambool Cheese. Yes, so
but to me, it's quite bizarre what happened today. I mean, we've been obviously in a bidding war. Rule number one is don't sell early because
Renee always said that. Get on the first bid.
Exactly, that's right, and just wait. But the decision today was, the buyer wanted about 10%, and that was Kieran. And
a Japanese company.
And it's fascinating why they wanted to buy it. Our understanding is because they get all their Coon cheese. Well, and they own Coon cheese, and that comes from
beer and cheese goes really well. Kieran beer, you go on.
From Warrnambool, they're the supplier.
And Coon and Bega would fight neck and neck with in the market.
Well, what they didn't want is they didn't want the Canadians to end up winning the takeover bid, and then they would have used that to supply Asia, the product straight up into Asia, and potential cheese up in Asia, and that really threatened, the supply of Coon cheese. And, geez, for all those little kids, when we were growing up, having a bit of Coon cheese in your lunchbox,
it's good to see
couldn't miss out on them.
Good to see a Japanese company has saved Aussie kids.
Fascinating. And what happens now? So our average cost is a lot lower than here. The question is, did we hold on? But it looked as though this was a blocking stake. So the logic was to sell out, and if the share price, I'd assume the share price has already fallen from the $9.25, the price we paid at, and Kieran bought most of their stock. It'll fall lower. If it gets significantly lower, then I think it makes sense.
You go again, would you?
It makes sense to buy back because share registers keep consolidating, so something will happen there eventually. The interesting one in the play is Bega. Because
it's kind of gone quiet, hasn't it?
Well, because Bega launched the first bid. Now
a scabby bid.
That's right, but their share price has gone up about 40% since they launched the bid. So the bid, I know the Warrnambool price is up around that high eights, but the bigger bid, the share alternatives around 770, 780. But does Bega then become vulnerable? If Warrnambool's not a play, do the Canadians look at Bega? And if that's the case, I think there'll be a bidding war. You'd see a bidding war in terms of Bega.
Yeah. Is this a part of the mining boom giving way to the dining boom? It's a great one.
I like the headline.
It's a great one, isn't it? But Australia's potential supplying Asia with food. It's great to think that when mines go off the boil, we can actually rely on dining. But we haven't got enough companies, and they're all takeover targets. So should we be worried, mate? And what company's next?
No, we shouldn't be worried because, and that's a normal evolution. And if we've both got a bit of grey hair. I got more grey hair than you.
That's right. But I lose it before it goes grey. But go on.
But if the people with a bit of grey hair, they'd remember National Foods, they'd remember QUF, Queensland Foods, they'd remember Associated Dairies. These are all listed companies that had dairy businesses that ended up being rationalised and taken over. So eventually Warrnambool won't be listed on the market. Eventually Bega won't be listed on the market. That's what happens. Grain Corp is another one. We probably talk about it a little later. Well, we talk about it now. We think it's a great buying opportunity.
So you've gone into grain.
Yeah, we are. We think it's the takeover bid. You probably make 15% on your money.
What about the government?
Well, on the 17th of December, they have to give the all clear for the takeover to go through. And
then it'll be like once the gates are open for the current bidder, Others will come in, you reckon?
No. You just get a. You just get a. For us, it's a low risk, 15% odd annualised return. If you bought Grain Corp around this price, you're getting a higher price from the bid, very low risk. That'll fall over, and you're getting a fully franked yield as well.
You've talked to Joe and Ferb, and they've told you, moral, go through it.
No, they haven't.
Good.
No, but I think it was at the Salvation Army, their appeal launch. Joe was there, and one of the guys in our office, he stood up and asked them a question about that. But he did, as a good politician,
he didn't answer it. Yeah, okay, rightio. Yeah. All right, let's talk about the chances of a correction. Like, we've all done very well.
Yes.
You're a great believer in the bull market. If I remember last time you were on the program, you thought the bull market's going to continue next year.
Yes.
But do you think there's a correction coming?
It does worry me how confident everyone's becoming, and how strong. Sorry, there's a lot of signs that the market's getting overheated in the short term.
Yep. Give me one.
Well.
Sorry, push on the spot, mate.
No, I've got a number.
Okay, give me five.
I mean, one of the unfortunate things is people, in the Fin Review, we used to see the stocks hitting record highs and the stocks hitting record lows, and they don't put that in anymore. Well, one of the guys in the office, Mark Tobin, he sends it around to us 7 o'clock every morning, and 2 mornings ago, it was about 50 stocks hitting record highs, 12-month highs, and 8 with 12 months lows. There's been money being raised recently. We've raised some money for our listed investment companies. We just closed off a capital raising this afternoon for Wax. We're just trying to raise a little bit of money, underwriting our DRP, 3 odd million. We're probably going to raise something like 16 million.
People are throwing money at you.
Justin Breitling, Australian Leaders, raised some money last week. I'm on the board of that as well. He had demand, wanted to raise a small amount of money, ended up raising 35 million, had demand 50 million. His share price is trading at a good premium to the value of his assets, so people are prepared to pay above what the value of a company's assets are worth to get exposure to the market. Now, to me, that's a little bit extreme.
Can I also revisit a stock I brought up last time in the program? Remember Xero? Xero was $14 then. Xero. Even then, you said, and most people agree with you, it just wasn't worth it. It's now 23, isn't it?
If you look at all the small mobile plays, if you look at the charts, we're looking at them today, they go like this. And I mean, a lot of some of the smaller stocks we've got have gone up 5 times, 10 times, and all that tells me is the market has to take a breather. And it's just every day the market's going up. It'll probably run into December, January.
And do you think maybe the US Congress impasse might spook people if the Republicans look like they can't control the Tea Party?
Could be, but it's Don Stammer always talks about the X factor. It's something we can't see at the moment. Something's going to hit us from the side.
That's the excuse I've given in advance of all my subscribers. If we get it wrong, I can't see it because it's not easy to see.
That's right. But you're 100% right. And the tough thing is, all I know is everyone is incredibly bullish at the moment. It's easy to raise money. Stocks have rallied, incredibly strongly. I was talking to a retail broker. He said his high net worth, up until a month ago, we're just buying the banks. The last month, they want options. They want leverage. They want to get exposure to the rally in the market. No, they want to take more risk. But this is when you should be going the other way. So, to me,
you're going the other way.
Yeah. Well, we're 75% invested, which for us is high. So, but we're net sellers because liquidity will dry up.
Okay, but the next obvious question is, all right, we have a pullback or a correction. Say it drops down 8%, that will spook a lot of people. But you'd be a buyer then. It's going to be a buying opportunity, isn't it? Because you believe the bull market's got maybe two years left.
Exactly. That's right.
And that's probably why we're not seeing much of a pullback, because everyone's waiting for it as a buying opportunity, and people aren't going to give themselves a chance.
The tough thing is, but when a market that's gone up 40%, it's got to revert a little bit.
What we need is a good X factor. Is that what you're saying? A good X factor.
Yeah, 39% in 16 months. If it's down 10 to 15%, it'd probably give everyone a bit of a scare. Some of the illiquid stocks, falling 30 or 40%. People got to realise it's. Anyone who bought stocks in the last 12 months, they're going to say, hey, this is the easiest game in town. How long has this been going on for? And it isn't.
Maybe we'll be able to get into zero. We have a nice correction.
Well, I tell you, I mean, we own some shares in an up-and-coming float, which you've seen nothing yet. If you think zero is freelancer.
Hey, freelancer. Okay, yeah. Well, I've had Matt on the program.
And he is
everybody wants.
He is impressive.
Yeah,
we've got a small position.
Yeah.
But
will you be increasing it?
Very happy. Yeah,
will you be increasing
we'll be buying.
Yeah, me too.
Depending on the price it comes on at day one.
Okay, right. Now, quickly, what stocks do you like right now?
What are we buying? FKP. They're doing a capital raising at the moment.
Yeah.
They're trading around $2. It's a property play. They're cleaning themselves up, selling their surplus properties, over 700 million of that, and focusing on the retirement business.
Yep.
NTA around the $2.70. So we wouldn't be at all surprised. Probably 30% upside.
FKP,
yeah. In that one. Transfield, again, getting their act together. New management, same deal. We think maybe $2 as a price target there.
Yeah.
They're the Grain Corp I mentioned.
Yeah.
That's a low risk, but a good solid play. There's 3 stocks. Oh, and I know you've got Mike on later by Kitchen by Mike.
Yeah.
My wife Karen, she introduced me to that about 9 months ago. It is the best food. I'll drive.
Is it a listed company, sir?
No, it isn't. But
one day it will.
I'd want to buy shares in it.
Okay,
I'll tell you what, on Sunday, the pork belly there.
Okay,
2 Sundays ago, I had 2 serves. It is delicious.
I've never been to this restaurant, and I want to go there, but you're going to be more people on the queue.
It is delicious.
Okay.
Well, I don't want everyone to turn up.
Okay. Now, when the excitement machine, which is Glenn Stevens, speaks markets, listen, and they really listen hard. And though I think he misjudged interest rates in recent years, I do respect him as an intelligent and wise central banker. And so when he recognises house prices rising as a normal cyclical dynamic, which of course he will watch closely, he's effectively hosing down the hype that the media is setting on fire right now. A housing boom after a decade of genuinely repressed prices is a normal cyclical response. And if it gets out of hand, 2 things will happen. First, he will raise interest rates, and secondly, relatively slow rising wages, which I expect, will mean banks won't be able to say yes to those silly enough to want to pay too much for a must-have house. The US housing collapse was linked to political stupidity and poor banking regulation, which we don't have here. And Glenn did some good work talking down the Aussie dollar, saying our relative costs and productivity don't support its current too high level. And of course, if the Yanks had started tapering QE3, the greenback would be higher and we would have had a weaker currency. However, as the Fed looks like it won't move until 2014, it means we can take a US Christmas holiday on a pretty strong Aussie dollar. That's great for our intrepid travellers, but not so good for our local companies that are crying out for a lower dollar.